G'day, thanks for listening. This week we're still on the theme of tax as we're approaching the end of financial year, and one issue that's probably been a bit of a bugbear in the past, and it does centre around debt and chasing tax deductions. And I've seen it many times where I'll see a mate, he's cruising around in a new work ute, and I'll say, "Oh, new ute," and he'll say, "Yeah, had a great year. My accountant suggested I buy a new ute." And so, okay, fair enough. But really, I question going into debt, so a chattel mortgage, going to debt to buy an asset to chase the tax deduction. So the instance I can remember very clearly is the previous ute that my mate had was probably only just over 12 months old, and he's updated that ute for tax purposes. So as we all know, that as soon as we drive any vehicle out the showroom door, we're going to lose substantial amount of money. So there is depreciation issues with any asset for business, but you get that depreciation value whether it's been purchased outright with cash or you've used a debt facility like a chattel mortgage or a lease to do so. So really chasing tax deductions by buying vehicles that are going to lose value and depreciate quickly is really not good tax strategy. It can be one element, but I think you'd look at farm management deposits for farmers, you'd look at superannuation, you'd look at bringing forward other expenses that you would need in your business before you go and upgrade a car that essentially doesn't add any extra income to the bottom, and profit to the bottom line. So that's what we're chasing. I've also seen it within, I suppose the teaching area and sometimes healthcare, where you can do novated leases and you can package up a vehicle. And the salary packaging businesses promote this quite heavily, but it really only works for people that are on the top marginal tax rate. So you need to be earning over $180,000 per year to get any real benefit out of that. And what I've seen people do is when they say, "Oh geez, I can use this novated lease and salary package it, I save tax, it all sounds great," they then go and buy a car that they wouldn't really normally purchase, but because they're using debt and they think they're saving tax, they buy a car that they wouldn't really pay that much for. So they're buying something they wouldn't normally buy, and that just puts them further into debt. So never chase buying depreciating assets to chase tax deductions. So I'll guarantee you the value of the asset going down will far outweigh any little bit of tax saving you get throughout the year. And I think there's a very good quote that I think it came from the barefoot investor's father. He said, "Buy the cheapest car your ego can afford." Thanks for listening. Please give us a thumbs up if you thought the video was of value, and you can also subscribe to our channel if you'd like to. We'll catch you next week.